Good morning, everyone. We will start this session in another 30 seconds. Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team, which manages model portfolio. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BHEL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. With this, let's look into Nifty's daily chart to understand how the market is placed at the current moment and what are the levels we are looking into, and also the O'Neill perspective on the market. For the last 2 to 3 weeks, Nifty has been trading very near to its 21 DMA, which is a green line here. So that level is going to be a very crucial level going forward for the index. It is trading slightly above that level. Yesterday, that level was held up, but if that level is breached on the lower side, we might see Nifty testing its 50 DMA as well, which is headline here. So these two levels are going to be very crucial level on the downside for the Nifty. These levels might act as support and might give good support for the market. On the upside, there is some slight resistance around 22,100 levels. Nifty has peaked around that level. So until that level is reclaimed, we might see some sideways movement. If that level is reclaimed on higher volumes, we might see Nifty scaling new highs again. Coming to O'Neill's perspective, we are under pressure. And with the distribution day count of 4, yesterday one distribution day was expired and one distribution day was added in the yesterday's session. As you can see, Nifty was down clearly more than 0.2% and volume was also uh, higher than the previous session. So we had considered yesterday's session as a distribution day. However, on net basis, there was no change in the distribution day count because one distribution day was expired due to 25 session rule. For more details about distribution days, you might browse through our learning articles, which are available on the website. And if the distribution day count further increases to 6 or 7, we might change the market status to under pressure. To downtrend from under pressure. On the upside, we want the index to reclaim the recent highs, and if that level is reclaimed, we might change the market status to confirmed uptrend. Coming to model portfolio, we already have a good adequate number of stocks in the portfolio, and if there is any stock which is moving sideways and which is not performing well, we might exit. And we are looking for fresh stocks which are breaking out from the base patterns, which are very strong in their fundamental character and as well as technicals. Are considering them to add to portfolio. Among the portfolio stocks, if there is any stock which is underperforming or breaching their moving averages, we would exit those stocks from the portfolio. With this, let's move on to next part of the podcast, that is key news. Earnings season for the December quarter has been going on, um, starting with LIC, that is the largest insurer in India, has come up with their December quarter results. The net interest income for the quarter has grown 4.7% year-on-year basis to 1.1 lakh crores. Profit has increased more than 49% to 9,400 crores of rupees. Net commission has grown 3.2% to 6,500 crores of rupees. Biocon, major pharmaceutical company has also come up with their numbers. Revenue has increased 34% to 3,900 crores of rupees. For the quarter, it has reported a profit of 660 crores. This is compared to a loss of 42 crores in the previous quarter, that is Q3 of FY23. During that quarter, there was an exceptional loss. That is the reason that the company has reported losses. And the company's chief financial officer has that is Indradil Sen has resigned with effect from March 15th for pursuing opportunities outside the organization. Rail Vikas Nigam has also come up with their results. The revenue has grown 6.4% to 4,600 crores of rupees. The profit has fallen 6.2% to 360 crores of rupees. These are the few companies which have come up with their results. Apart from this, there are other companies also which came up with their results. But these are the leading stocks or large stocks in terms of market capitalization, which we have taken. And Bharat Heavy Electronics Limited, that is BHEL, has received an order from Haryana Power Generation Corporation for setting up 800 megawatt ultra critical expansion unit. The overall contract value is estimated of more than 5,500 crores of rupees. So these stocks will definitely be under radar today. There might be some volatile action as well in these stocks. Talking about today's results, stocks like Hero MotoCorp, Tata Power, Zydus Life Sciences, Let's Cables, Pfizer, MRF, Pi Industries, Bandhan Bank, Alchem Laboratories are some of the companies which will be coming up with their results. So if you have any of these stocks in your portfolio, please be watchful for your positions. We might see some volatile action in these stocks. For the global update, US market closed on the positive territory, even though the magnitude of gains are not pretty much higher, almost 0.1 to 0.2% gain. Asian markets are also trading on the positive territory. As we speak, Nikkei and Kospi are trading 0.4 to 0.5% range higher. Shanghai Composite is closed for today. GIFT Nifty is indicating a muted opening for the index, and yesterday Nifty closed around 21,718 level. So 40-50 point higher opening is expected according to GIFT Nifty, and the global cues are also similar. There are positive cues, but the magnitude of positiveness is not higher, but there are clearly positive cues are there from the global market. For the chart of data, we picked Kaynes Technology. The stock has been trading in a stage 2 cup with the handle base pattern. And it is trading very close to its pivot. It is just 2% to its pivot. And it is clearly trading above its key moving averages. Base formation has been ideal. During the base formation, the volumes have dried up, and if the stock breaks out on a above average volume, it will be definitely a very good stock to add. You can look at the ratings here. The EPS is at 99, price strength 87, ABD rating of B+, indicating strong fundamental and technical ratings. Number of funds has also seen a very good improvement for the company. You can see there is a sharp increase in the number of funds for the last 4 quarters consecutively. On ONL methodology, this stock is looking very good. That is the reason we have included this in our buy watch list as well. And if these stocks come under the buy range, definitely a very good stock to add it to portfolio. Thanks for joining today's pre-bill. Have a good trading session.